Hello and good evening. This is Doc Severson for the ReadySetCrypto OMNIA newsletter market update. For Tuesday, the 10th of March, I'm looking at the S&P 500. Again, this is the S&P 500 ETF, known as the SPY or Spiders. And today what we're seeing is almost a complete reversal of the candle that we had yesterday. Now, this came at great cost because we go down to something like the 5-minute chart of the S&P, we can see that today was no fun. Here was yesterday's close. We gapped higher today to start off the session and then immediately dive bombed, undercut the lows, waffled around for a while, and then here's the important point is that we closed at the highs of the day in a late afternoon rally. Now, this is something that you can also apply towards the crypto markets, because as goes this market, this is the most important market really in the world right now. As this market goes, so goes the rest of the markets. Now, we used to have inverse correlation between the S&P 500 and crypto markets, and now we don't, because this is because everything gets chucked out. The baby gets thrown out with the bathwater when we have crashes in extremely heavily followed assets like the S&P 500, which is worth trillions of dollars. Last count, $33 trillion, maybe not so much right now. So right now, if the S&P is weak, everything's going to be weak. Everything's going to get chucked out. I mean, we had the same issue back in 2008 with gold. Gold was viewed as a protective asset, but it got sold as well too back then. Nobody wanted to own anything at that time. And we've kind of had the same problem recently over the last couple of weeks. So this is a very unusual situation. It's something that you never truly fully prepared for. And this weekend even made it worse because of the whole oil situation. We had the 10-year note just completely dropping to about 0.5%. And now we're back up to, we had a big bounce in this all the way up to 0.75%. So big jump in a 10-year note interest rate. I am being facetious with that. I mean, this is still extraordinarily low. This is the lowest value of the 10-year note ever recorded. So to have any kind of relief off of there is actually a good thing. And as a result of that, really right now, the main asset that has been the safe harbor has been the bonds. And the bonds came down in a big way over the last couple of days. So reaching a new high and then selling off after that. So what happens from here? Let's go back to the S&P. And now again, seeing this pattern back to back like this, where we had this, ugly candle that couldn't get out of its own way. And then today was a great example of a hammer in the S&P. Now, keep in mind that these are still lower highs and lower lows. So we had a lower high a few days ago and a lower low. So a good start to the bounce, but it's unlikely that this is going to just bounce straight up here and take out this former lower high, unless it's going to be like the Ebola rally back in 2014, which did exactly that. But it's highly unlikely to do that. So we may bounce up a little bit, come back down, form a higher low. That may be the beginning of the relief rally from here. Although I do think that markets are in trouble right now. Eventually, we are going to see cryptocurrency be viewed as a safe haven from some of the fiscal policy that we've seen impressed upon traditional markets like this. But when you have like I said, a $33 trillion asset losing 20% of its value in no time at all, there's no time to sit here and argue as to whether or not you should hold on to something. Those people are raising cash in any manner that they can. And that includes divesting from some of their Bitcoin inventory. Okay, so here we are with about 2 hours left in the trading day right now. And Bitcoin is holding that very important $8,000 level really well. Now, this is the one that we pointed out at length recently because of the volume profile right around 8,000. So this is doing its job right now, kind of hugging that point of control for the time being. As we look through the rest of the assets, some of these are actually doing pretty well, some better than others. But really the bottom line here is that until we get some sanity that gets to the larger markets, crypto is going to be held hostage. Eventually, if this continues long enough, if the equity markets turn into a true bear, so if we pull into a monthly lower high and start rolling over again, usually the worst selling is at the very end of things. So if it does pull into an absolute bear, then crypto may be viewed in some time as an asset hedge for the larger markets. But if we get some stability in the short term, 8,000 may turn out to be a nice intermediate high. Remember, this is just a weekly pullback. And if it's able to find support and print a higher low here, then that's a good sign. And this is following out with what I talked at length over this weekend with the larger term monthly pattern, which is just, again, let's draw it here. It's just a great big wedge. We may have some volatility in the short term, but don't lose the larger picture of what's going on here. All right, guys, that is it for today's report. Thanks for listening. We'll see you tomorrow.